So Bitcoin, Gbpjpy, you can see the watermark, Gbpjpy on the yearly time frame. So the only thing we want to do now is analyze it all the way to the 15-minute time frame. So what you do, you mark your highs and then your lows. So let's start with here. This becomes our high. This becomes our low. Okay. And then you also mark this as our high, and then this as our low there. Okay. And then from here, you come and mark these other highs here. You mark these lows. Okay. That is just the simple thing on how you analyze the market from the bigger time frame. Then you come inside here, you mark your high. So this becomes the next high. Okay. And then you also mark this other high we are in now. So once you have that, now this candle has not yet closed. The yearly candle, we still have about 2 months and 13 days for this yearly candle to close. So we cannot consider this as a yearly high. So now we have no more to mark. We can come to a lower time frame, and that becomes the monthly. So on the monthly time frame, this is the picture you would be having. This is the high we had marked. And then you also, now we don't want to move further. We just work with this. So you repeat the same process. You mark your highs, you mark your lows. So this becomes your high. And then this becomes your low. This one here becomes your low. So once you have this, the next thing you want to also do, you mark also these other high, okay? And then you mark these other lows. So we have no much to mark here other than also considering this week. If you look at this, also becomes your next low, so you mark it. Its high is already matching with what we had marked here, so there was no much worries. So the next thing you need to do is look at candles individually. Okay, so we have this strong break and then we have this low. So you also mark this low. Okay, now whatever we've marked here becomes our potential resistance and support depending on whether we mark it high or low. For the low ones become potential support. The highs become potential resistance. As we talk now, price is at a resistance level, meaning we could actually sell. But you cannot sell here on the monthly. You need the lower time frame. So you come to the lower time frame. So on the lower time frame also, you repeat the same thing we did, which is to mark your highs and then you low. So we have a break, and then we have this other high. It was broken, and then so this becomes the immediate potential support in case price pulls down. So once you have that, the next thing you need to do is to also mark this low here, which will be potential support. Okay. Since the week has closed, we have some wicks here. So this becomes your weekly low. So you mark this weekly low, previous weekly low, and then also this week's low. Okay, because the weekly candle has closed. So now you have a very good area to trade from, which is between this high and then this low here, which is your resistance and potential support. But the market is looking bullish. So once you have that, you can begin to mark this. Just we have a resistance there. So you just do it like that. And then we have another potential resistance here. And then we have another high here. Okay. So on the bigger picture, market is bullish. And then there are all kinds of traders, intraday and all of that. For you to understand price more on this and for you to be able to trade, you always go to a lower time frame. And on the lower time frame, this is what we had. You can see we had a resistance area here, okay? But there was no way you could trade this resistance here. And then we have a potential support here because of this weekly low. But if you also study price carefully, you will see it's a ranging. So we are in a range here. So this range can only result into two things. It can either break or upward to continue or break downward. But if you look at the bigger picture, this is an impulse, bigger correction, and possibly another impulse to the downside. But our concern is just on these areas here. So we can go to another lower time frame, which will be the 4-hourly. So on the 4-hourly, you begin to see now how this resistance has actually played out and held price, because we have a high here, and then we had these highs market ranging between this. So now when it reaches this resistance, we had a serious pull to with this bearish candle here. So the next thing is to now study price here and possibly how it could actually reach here, because we are in a range now. So you need to define your range. This is the range we are in from this to that. So market is actually just ranging here, and something big could actually be happening, which would be a break. So for you to study more, you just always go to your lower time frame and begin to see whether there we have trends. Okay. So following the same example we had done, okay, you can see here a strong break. Okay. Then you mark this low, and then this is where market retested it here, giving you another smaller resistance here. Okay. So once you have that, another smaller resistance there, and then what we have now, we have another strong break. We have this candle here, which is also another strong break. So this is another area we'll be looking for. So you just study this. This is how price has actually been playing out. And when you come to your lower time frames of Friday, you would have gotten your trading opportunities, because remember, the next thing you need is once price is at a resistance area, you wait for your bear engulfing candles, and that is where you get your entries. And that is that. So the next move we would be expecting is whether these areas will hold price for intraday traders. This is potential next resistance. Better still, if it is broken, we could actually wait for it here and then see whether we can get bearish engulfing around this region here. So that's how we just map and analyze the market from all time frames and all of that. So the best thing to actually do is to wait for price to come to these levels here, get a confirmation, and then begin to trade.